Welcome to our 2022 M&A review webinar for the media and marketing services sector. It's really positive to see so many of you signed up and attending this morning. Hopefully, this is indicative of the high level of interest in today's topic. And for many of you who are regulars, you're continuing to find our content useful. For those of you who aren't as familiar with us, Moore Kingston Smith is a top 10 firm of accountants, tax and corporate finance advisors, working with clients across a wide range of commercial sectors, as well as not-for-profit and private clients. In our West End office, we have a team of 7 partners and over 100 people who specialise exclusively in working with the media and marketing services sector. We're also part of the Moore Global International Network, which consists of firms over 100 different countries. We regularly team up with our colleagues across the globe to assist on cross-border matters and to support clients with their international growth aspirations. Our media specialist corporate finance team specialises in M&A, particularly sell-side advisory, which is taking sellers through the entire sale process. Strategic growth services, where we help businesses to get into shape in advance of a capital event, and financial due diligence, acting for a number of strategic trade acquirers and private equity houses in the space. I will now start our 2022 M&A market overview for you. So, diving in, 2022 was another bumper year for M&A in the sector, with a 19% increase on transaction volumes on 2021 to 451. Quarter-on-quarter transaction numbers, as shown in sort of the bar chart on the left, held up in Q4 at similar high levels to Q3, with 116 transactions completed, which, considering the wider macroeconomic turbulence in Q4, following the Trussonomics short-lived experiment, is considerably better than it might have been. Of the 451 deals we recorded in 2022, 302 of these involved marketing services companies. Of these, whilst most deals involve the acquisition of traditional service-led agencies, 27% of the deals we recorded in Q4 were technology-led. We tend to record fewer deals in publishing, TV, film, and entertainment. And in the whole of 2022, we saw 40 publishing transactions and 109 deals in TV, film, and entertainment. So that's a sort of scrolled out view of what happened last year. I think it's very hard to talk about M&A historically in the sector without talking about the networks, so the large marketing services groups. And it really is a tale of two sides here. So firstly, the ones not on the screen. So 2 of the major holding companies announced no new deals in Q4, which were Omnicom and Dentsu. In fact, Dentsu made no acquisitions in 2022 at all. It remains to be seen if the cost of debt will lead to more activity from listed groups who are able to transact with their own paper in the coming years. Another listed business which isn't on there is Next 15, and they were mainly consumed with the battle for control of M&C Saatchi, which finally came to an end in October, with M&C Saatchi shareholders rejecting the offer from the last bidder standing at that point, Next 15. They elected instead to remain independent. Next 15 did buy Engine Group for 77.5 million in February 2022. And was prepared to spend big money, over 300 million for M&C Saatchi. Now that deal isn't going to go ahead, we might expect Next 15 to look for alternative acquisition targets in 2023. Now, whilst they may have been disappointed that the takeover bid for M&C Saatchi failed, their shareholders didn't seem to be, and their share price went up by 14% on the day that the bid was finally rejected, implying that the market thought it might have been better off on its own. And Next 15 closed out the quarter actually up 21% overall. Turning to the more active networks, Havas was the most active network acquirer in 2022, completing a total of 9 transactions during the year. In November, Havas announced that it acquired Australian health communications agency Bastion Brands. WPP completed 2 deals in Q4, and which brought its total for the year to 7. And in October, it announced the acquisition of Californian brand design agency Passport Brand Design. And in December, it announced the acquisition of Canadian commerce agency Diff, which specializes in developing solutions for the Shopify commerce ecosystem. Publicis completed its third acquisition of 2022 in November, with the announcement that it had acquired Central and Eastern European affiliate marketing agency Viv Networks, and it intended to integrate it into its existing global performance marketing platform. IPG only completed 2 transactions in 2022, its second being the October acquisition of Rafter1, which is a provider of multi-cloud commerce solutions on the Salesforce platform. Turning to the challengers, Stagwell, who are highly acquisitive, have announced that it had bought customer experience and insight data platform Maru Group. S4 Capital completed 12 transactions in 2021, but in 2022 only managed 3. Probably hampered for much of the year by the failure to publish its results on times and profit warnings, which also led to a collapse in its share price. Mission Group also announced 2 deals in Q4. In December, it announced that it was acquiring London-based specialist sports marketing agency Influence Sports and Media, as well as Cardiff-based social media agency Populate Social. The 2 agencies will retain their brands and identities post-acquisition and form an integral part of Mission's newly created entertainment, sports and lifestyle agency, Mongoose Group. Turning to private equity, overall, we've been tracking what percentage private equity makes as a percentage of overall deals in the sector for quite a while. And you can see the last 3 years on this graph here. PE, probably since 2021 here, as you'll see, made up the majority of deals in the sector. But in Q4, the percentage of private equity-backed deals dropped from 58% in Q3 and 2 to 46%. Now, that's only 1 quarter and could be a blip, but anecdotally, it could be because deal models are being reworked for changes in the cost of debt. It remains to be seen if this is the start of a curtailment in the leveraged acquisition model as interest rates have risen, or just a blip. Now that interest rates seem to be being revised to a lower peak, actually, as predicted in the last webinar we had with The Economist, maybe that will bounce back quickly. There are also rumours of some PE-backed groups looking at secondary events. At the smaller end of the market, bolt-on acquisitions for the platform buy-ons on buy and build strategies, which are often funded out of existing cash, seem to be continuing. But I'm sure George will give you a view on that himself later during the panel discussion, if we ask him. Digging down into PE, so just picking a few PE-backed acquirers. Brain Labs only did 1 deal this year, which was Fanbytes, which is an influencer agency, which they did in Q2. Sideshow, we saw 2 deals from Sideshow Group in Q4. It acquired marketing and data science business Moore at the end of October. The Moore transaction was announced only 2 weeks after the announcement of Sideshow's largest deal to date, the acquisition of Nemensa, who use AI and machine learning to provide customer insights, design and strategy. Sideshow has been growing organically and through acquisition, supported by investment from Waterland Private Equity in March 2021. And following these 2 recent acquisitions, Sideshow now has a headcount of 850. And it's got offices in the UK as well as Barcelona, Amsterdam and Vancouver. The Inspired Thinking Group, who are backed by Bridgepoint, went through a transaction in 2022 when Bridgepoint bought out Equistone. It bought Brand Machine, the New Zealand-based marketing software business, in June 22, and then followed up with Emerald Thinking data planning and analytics services business in December 22. Looking at some other PE-backed businesses, a call out about Jellyfish. So they had a massively busy 2021, but made no acquisitions in 2022. They did raise further finance during the year, so remain a business to watch. Debt did 1 deal in Q3, Shop Talk, an ad agency based in the UK. Crowd did a deal in Q3, which was Born Social, and probably should look out for more coming. And IDHL did 1 deal in Q1, which was Ampersand, which is an e-commerce transformation business. Another notable transaction last quarter was global programmatic media specialist MIQ's November acquisition of a UK-based AirGrid, a privacy-first audience platform. The acquisition of AirGrid comes 2 months after PE house Bridgepoint acquired them from its previous PE backer ECI Partners, a transaction that we actually highlighted in our Q3 report. Looking at MarTech more widely, it accounted for well over half of all technology-led marketing services transactions recorded throughout 2022. And of the technology transactions, 58% of them were MarTech, 32% were ad tech, and 10% were media tech. So that remains quite an important area for the sector. Digging into some other private equity-backed groups, which I'll just cover off quickly. So Horizon, who back the marketing practice, bought 3 businesses in 2024 in Q1, Q2, and Q3. MSQ, who are backed by LDC, did 1 deal, but that was in Q4, which was the one highlighted on the screen there. And Gravity Global was very busy making acquisitions in the States. Some other people to mention are probably Strat7, who did a deal in Q3, which I think was Jigsaw, and Together Group, who are a newly formed business. I think they formed in Q1 2022 as the result of a merger of 5 founder-led agencies focused on the luxury and lifestyle sectors. And they announced that they'd acquired Folk, a London-based agency building social strategy and social commerce offerings for luxury brands. So it was still quite busy in 2022, as you'll have gathered from that by the PE houses. Turning to the outlook, and I guess this is the bit where I get my crystal ball out, and it's not so easy at the moment. I think if we look back, and I'll start by looking back, the recent trends we saw post-pandemic was a resurgence in M&A. And we saw that in the latter half of 2021, and it's certainly carried throughout 2022, actually. And sort of the initial fears we probably had a few months ago that the macroeconomic and geopolitical concerns would affect the market have not yet been realised. The UK market is still hotter than it has been for some years. However, we are anticipating a slightly quieter market in the first half of 2023. Private equity-backed investments, as we said, have fallen to 46% of all deals in Q4, which represents quite a big drop-off from previous quarters. And in both the previous quarters, if you look at the people who've been acquiring, Brain Labs, the marketing practice, Gravity Global, all announced no new acquisitions in the final months of the year. This reduction in private equity-backed activity could reflect concerns about the rising interest rates and the affordability of transactions. If you scroll out, many M&A transactions require debt, and private equity transactions require a substantial amount of debt, more often than not. And as borrowing costs increase, it may become harder for private equity to compete with corporate acquirers who are investing from their own balance sheets and maybe less leveraged. Turning to the public markets, the Moore Kingston Smith Marketing Services Index significantly outperformed the market. It was up 14% across the period, driven by strong share prices of the constituents of the index. And, even looking today, recent improvements in share prices of the global listed marketing services groups and the wider stock market, I think the FTSE actually hit a record high today, is likely to increase their appetite for acquisitions, especially as they'll find it easier and cheaper to use their paper as currency. So, whilst we might think Q1 and 2 might be slightly quieter, overall we remain bullish about the market's performance, especially in the second half of this year and beyond, as acquirers and debt funders adapt to the new environment, and hopefully recession fears and interest rate peak predictions continue to recede. Hopefully that was useful.